Well, before I answer that, I do want to give a lot of credit to our partners in this David versus Goliath battle.
Earlier this month, while delivering a powerful keynote address at the Bitcoin Atlanta conference, MicroStrategy founder and executive chairman Michael Saylor predicted that the spot Bitcoin ETFs will quickly surpass the gold ETFs, and just as rapidly, this SPY ETF, which is currently the world's most traded ETF, trading $38.3 billion daily on average last month. The ETF, which tracks the S&P 500 stock market index, became the first ETF to reach $500 billion in assets under management. Our founder, CEO, and CIO, Cathie Wood, agrees with Saylor that the spot Bitcoin ETFs will easily surpass the giant funds milestones and do it in a shorter time frame. According to Cathie, Bitcoin is on the path to becoming a $20 trillion asset class by 2030 due to several perfectly aligned factors. During a recent interview with the New Zealand Herald, Cathie talks about a really interesting and important aspect of Bitcoin's supply and demand dynamics. Since their launch on January 11th, the 9-spot Bitcoin ETS and GBTC have bought 79,6238 Bitcoin, equivalent to more than 4% of Bitcoin's current circulating supply. According to Cathie, there is still so much pent-up demand, with thousands of institutional investors still biding their time to come aboard, yet long-term hodlers are not willing to part with their coins. As a result, Cathie estimates that Bitcoin's price is about to get significantly higher, high enough for some of the long-term hodlers to let go of some of their coins for new buyers like BlackRock and ARK Invest. During her interview with the NZ Herald, Cathie also discusses the impact of the upcoming halving event on the cryptocurrency's price, especially with the addition of the unprecedented demand from the ETS. According to the ARK Invest CEO, all the factors are properly aligned for a very bullish year for Bitcoin and, by extension, other cryptocurrencies. As we bring you clips from Cathie's interview, please take a little time to give this video a thumbs up, subscribe to the channel, and turn on the notifications bell for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
21 shares is the infrastructure and ops of ARC 21 shares. And then Resolute is our distribution partner here in the US. So have to give them both lots of credit. And of course, our team, our incredible research team as well. So that done, do we agree with Michael Saylor that ultimately this category, Bitcoin and other crypto assets, could be bigger than SPY? Yes, we do. Absolutely, we do. And Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion. It will be worth $20 trillion. Now, how much will ETFs get of that $20 trillion? I don't know, but that already right there is, if you think about it, I mean, it runs circles around SPY, number one, and I believe all of public equities globally, no matter what wrapper they're in, are valued right now at roughly $120 trillion. So when I say 20 trillion by 2030, that's a very big category. Okay, so all of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for, I believe, 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million. And the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin, and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that, that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to wrest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets in at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically. Yes, so the halving. So we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response, and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around, when they didn't even know what Bitcoin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is, and each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history. It is what my mentor, and many people know Art Laffer for his Laffer curve and fiscal policy and so forth. He's a monetary scholar as well. And he said, I have been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971.
In other news, senior Bloomberg ETF analyst Eric Balunis's latest spot Bitcoin ETF update is as bullish as ever. In a post on the social media platform X on Friday, Eric noted that all spot Bitcoin ETFs were having another impressive trading day. His post reads, "Something is in the water again. The 10 Bitcoin ETFs have seen a big day's worth of volume in the first 2 hours, on pace to beat Tuesday's wild $10 billion day. BlackRock's IBIT alone is $2.2 billion. $1 billion a day is big boy level. IBIT is doing $1 billion an hour." In a follow-up post, Eric added, "Here's a look at the weekly volume for the 10. It has already crushed the record set last week, with $30 billion traded, and probably will add another $6 billion this week when the dust settles at 4:00 p.m. It's been about 2 months since the ETFs launched on January 11th, yet they are still breaking and setting records. This shows that they are not a passing fad, but are here to stay and, as Cathie and Saylor have predicted, completely upend all other ETFs and asset classes." What are your thoughts on Cathie Wood's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.